education credits. We have two different education credits. We have the American Opportunity Credit, AOC, not to be confused with that, well, I guess they do TC, American Opportunity Tax Credit, so not to be confused with that famous congressperson, and the Lifetime Learning Credit. LLC, just so you can see, understand my abbreviations here. The American Opportunity Credit is the more valuable of the two credits, but there are more restrictions on how you can use it, who can use it, and under what circumstances. That was also known as the Hope Scholarship Credit, but they renamed it to the American Opportunity Credit. This is for higher education expenses paid for the taxpayer, their spouses, or a dependent. Okay, qualifying expenses, again, we need to know what those are. Same as what the qualifying expenses essentially for the student loan interest deduction. So tuition fees, other related expenses paid to an eligible educational institution while they're pursuing their undergraduate, graduate, or vocational degrees. So that's actually, I don't like how they worded this because they applied both credits to this pursuing undergraduate, graduate, or vocational degrees. The American Opportunity Credit, yes, you have to be pursuing a degree, and it has to be undergraduate. For Lifetime Learning Credit, you actually don't have to be pursuing a degree. You could just take a class here or there, but it has to be higher education class. Can't be, it's not like for high school tuition, that sort of thing, for a private school. Qualified tuition and related expenses include course materials such as books and supplies for the American Opportunity Credit. Okay, I don't like this wording because some of the things they're saying here is they're talking about the American Opportunity Credit here, but they've got Lifetime Learning Credit up there. This is really the American Opportunity Credit. So because you don't, like the pursuing undergraduate, graduate, or vocational degree is a requirement of the American Opportunity Credit. Tuition related expenses, tuition counts for both. Related expenses, course materials, books and supplies, American Opportunity Credit, yes, absolutely. Lifetime Learning Credit, there are restrictions on the books and supplies. Room and board does not count. Student activity fees do not count. So that stuff isn't included. It must be for an academic period that begins in the same tax year as the year of the payment, or that begins in the first 3 months of the following year. So if you pay in December for spring semester, that's fine, right? Then you can get the credit for the payment in December for that tax year. All right. Some of the differences between the two. American Opportunity Credit. Up to $2,500 credit per eligible student. So you can have more than one student eligible on your tax return. Available for the first 4 years of post-secondary education. Only for the first 4 years. So if you guys don't have a bachelor's degree or some other 4-year degree, if you haven't finished 4 years of undergraduate education, then you would be qualified for it. But if you have even if you don't have a degree, if you have claimed the credit for 4 years, you can't claim it any longer after that. So first 4 years of post-secondary education. Up to 40% of the credit may be refundable. So 40% of that, which is $1,000 of the $2,500, can be a refundable credit. So can bring you, but only 40% of it. So not 100% refundable. Student has to be pursuing an undergraduate degree or other recognized education credential. Has to be enrolled at least half-time for at least one academic period during the year. Qualified tuition-related expenses include books and supplies, whether or not the materials are bought at the educational institution as a condition of enrollment or attendance. You also can have no felony drug conviction. You can be convicted of murder, but you can't have a felony drug conviction. Don't ask me. I have no idea why that particular felony stands out as being disqualifying, but it's no felony drug conviction. That's the American Opportunity Credit. Lifetime Learning Credit. $2,000 credit per taxpayer. That means per tax return. So if you've got 3 people that are pursuing, you don't each get $2,000 total per return. Doesn't matter if it's the first 4 years, if it's your 18th year of pursuing a degree. It's for all years of post-secondary education for courses to acquire or improve job skills. You could also be degree seeking. That's not a limitation, but it doesn't, there's not like over here, first 4 years of post-secondary and what is it also? Must be pursuing an undergraduate degree or other recognized education credential, right? So you're all here, you're pursuing your AAS, that would count as a recognized credential. Non-refundable, no part of it is refundable, can't bring you down below 0 tax liability. Do not have to be pursuing a degree or other recognized educational credential. Available for 1 or more courses. You don't have to be at least half-time with the AOC. You do have to be at least half-time. Qualified tuition and related expenses include course-related books, but only if the amount was required to be paid to the institution as part of the enrollment and attendance. So the difference here, if it's required to be, they're required and you've got to pay it to the institution. You can't take the class unless you do pay for it. Here, you can buy the books anywhere. It doesn't have to be to the institution. It's just, all of your books and supplies would be included. You can have a felony drug conviction and still take the lifetime learning credit. So, or you can be a murderer as well, whichever you choose, or any other various type of felony conviction. So eligible educational institution, post-educational, any place that you could get a student loan, essentially, would be qualifying. Oh, this is just an example of, in December, Fred pays his son's college tuition for spring semester. He gets to take the credit in 2023 because of the payment in December, because the son started in the spring. You can still take it even if you're using borrowed funds. It doesn't have to be your cash. So if you take out a student loan, say $10,000, that $10,000, because you paid it to the educational institution, still counts. Okay. Qualifying expenses, if a student receives a scholarship or other income that's excludable, then you have to reduces your qualifying expenses. Okay, so if you got a loan for $10,000 and then you got a grant for $5,000 and your tuition was $15,000, you don't use the $15,000 to calculate, you use the $10,000, right? Because you got the grant and you didn't pay tax on it. So, if a dependent pays for qualified expenses, the expenses are deemed paid by the taxpayer. That means that if a student pays their own tuition, but they're still a dependent on their parent's return, the parent gets the credit, not the student, even though the student paid for it, if they're still a dependent. So if someone other than the taxpayer, spouse, or dependent pays the expenses directly to the educational institution, the expenses are then deemed paid by the student. So if Uncle Fred pays and pays it directly to the school, then it's the student that gets the credit in that case. But the problem with that is a lot of times students don't have enough income to really make all of the credit count. Let's see here. Oh, just so a worksheet for figuring out the credit. Schedule R. Oh no, I'm sorry. This is not. This is for the last one, the elderly or disabled credit. Never mind that. I mean, you can look at it if you want. But so we got Aunt Juanita pays college tuition for her nephew Fennell. The expenses would be deemed by Fennell. If Fennell is a dependent of his parents can take the credit, even though it was the Aunt Juanita, that paid it. Okay. All right. How do we calculate it? Or any questions up to now? Okay. American Opportunity Credit. How do we calculate this? So 100% of the first $2,000. And then 25% of the next $2,000. So up to $2,500, because 100% of 2,000 is 2,000. 25% of 2,000 is 500. So up to $2,500 maximum per student per year. Student must be carrying at least half of the normal full-time course load. That would be determined by the school, whether they're half-time, at least half-time. And it says on like the students get a 1098 form, you've probably gotten these before, 1098 form at the end of the year, and there's a little box at the bottom of it, because it says how much was paid for tuition, well, how much was billed anyway. I'm not sure if it says how much was paid now. But at the bottom, there's a box that says at least half-time student. Whether, if it's checked, then this would qualify. If it's not checked, then it would not qualify. Student also has to be enrolled in a program leading to a degree or other educational credential. It is available for the first 4 years, as we saw up there. So up to $1,000 can be a refundable credit. So taxpayers may receive a refund even if they don't owe any taxes. None of the credit is refundable if the taxpayer claiming the credit is a child under age 18 or a student who is at least 18 and under 24, so they don't get it refundable if you're paying for it themselves and they're not a dependent on the parent's return. If they're earned, and whose income is less than 1/2 of their own support, has at least one living parent, and does not file a joint return. All right, so let's look at some of this example here. Lauren and Ed paid $3,600 of qualified tuition and related expenses for their daughter, who is in her 4th year of college. This included $450 for books and supplies. So without any regard to AGI limitations, because there are AGI limitations as well. So you do all these calculations to figure out what the credit, what the maximum credit is. Then you have to compare it to the AGI limitations, because that credit may be reduced. So 100% of the first $2,000 of expenses, and then there's $1,600 left. 25% of the next $2,000 of expenses. So $2,000 plus, what is $200? So $2,200. Do I have that right? Maybe not, 400. Sorry, 2,400. They probably have the answer right here. Yeah, $2,400 of credit. So, like I said, the first 2,000, 100%. Second 2,000, 25%. So in this case, the first 2,000, 2,000. Second 2,000 actually is up to 1,600. So 25% of that is 400. Add those two together, 2,400 for the maximum credit. That's the American Opportunity Tax Credit. Is that okay? Lifetime Learning Credit. This one's much more simple, by the way. There's no refundable portion. It's 20% up to $10,000 of qualified tuition and related expenses. Mostly just tuition. Neither of these count room and board. Okay, it's only the tuition and fees and books and stuff like that. Credit is determined per taxpayer, not per student. Maximum credit allowed for a taxpayer, which is a tax return, is $2,000 a year. Okay, so here, Emmett Francine paid qualified higher education expenses of $3,000 for their daughter and $4,000 for their son. If it's a lifetime learning credit, so $3,000 and $4,000, that's $7,000, 20% of that, they get a $1,400 credit. If it was $12,000 of expenses that they paid, it's limited to $10,000, so $2,000 is what they would get, 20% of the $10,000. Yeah, degree program doesn't really matter. Courses for improving job skills, basket weaving, whatever. As long as it's a post-secondary education, you can be graduate school, any of that stuff. All right, so now we've got some phase-out limits to talk about. Now that we've figured out what our credit limit is, we got to figure out what the phase-out is. So, they both have the same phase-out rules now. Single taxpayers, 80,000 to 90,000. That's our phase-out limit. Married filing jointly, double that. Yeah, 160 to 180. This is for our modified adjusted gross income. So usually this is AGI plus income earned abroad. So anything that has been excluded from income because you earned it abroad, you would add to it. So for our purposes, we're not gonna worry about that. All right, so to figure out how much it's reduced by, we're gonna take, and should be kind of familiar for you, take the upper limit minus what our modified adjusted gross income is, divided by our phase-out range. So our range here, obviously, so 80, that's $20,000 between those two, $10,000 between those two. So if we have, let's say we're married filing jointly with 175K of income, we're gonna take 180 minus 175 divided by 20. So what's 5 divided by 20 is that 20%? 25%. 0.25, right? Yes. So 25% of our qualified expenses are deductible. So we'll take that percentage and multiply it by our qualified expenses, or qualified credit. Once we've calculated that credit using those, so like if we've got an AOTC, let's say we had $10,000 of expenses, then the first 2,000 is 100%, right? Second 2,000 is 25%, which is 500. So our credit is 2,500. But if our AGI falls at 175,000, now we're going to multiply that by 25%. And we get, what do we get? 25. How much? 625. that's our credit, because our AGI fell in that range. And it's toward the upper end of that range, right? We are 75% into that range with our income. That makes sense. So 75% is not allowable. So we're allowed to take 25% of it. Here's another example here. Quinn and Andy are married filing jointly, have modified adjusted gross income of $164,000. Okay, so they're in that range. Pre-limitation lifetime learning credit is $1,200. So, let's look at this calculation. So they are, so we've got a credit of $1,200, pre-limitation credit, AGI is 164. So we'll take 180 minus 164 divided by 20. %, 0.80. So we'll multiply that. This is the amount that's allowed. 960. Okay. Does that make sense? That phase out, that limitation? I'm getting some blank stares.
I'm just making sure I understand where all the numbers come from. 20,000's from the number that they give us up there.
20,000, yes, that's the phase out range here.
Right.
This is, there's a $20,000 range here.
And then in the book it says times 1,200, is that?
Yeah, that's just the example that they gave us here. So they had $1,200 of pre-limitation credit. Yeah.
Okay.
Yep. So once you've figured out the credit, and again, if it's lifetime learning credit, that's not gonna be any greater than $2,000. If it's American Opportunity Credit, it can't be any greater than $2,500 per student. Those are the upper limits. And then you apply the modified adjusted gross income limit. So you could go through this whole rigmarole and find out that you don't qualify at all because your income's too high. You can use qualifying expenses for the American Opportunity Credit or the Lifetime Learning Credit, but not both. So you're gonna take whichever one is greater. You can't, obviously you can't take both. That's double dipping, that doesn't count. What else here? Okay, so we've got Art and Arlene paid $3,200 of qualified expenses for their son, Albert, who's a freshman at State University, so their American Opportunity Tax Credit. Modified adjusted gross income is $73,000, and they're married filing jointly. They could take either an American Opportunity Credit of $2,300, which is 2,000 of the 100% of the first 2,000, 25% of the next 2,000, or $1,200 in their case, or a Lifetime Learning Credit is $640, but not both. Well, duh, they're going to take the American Opportunity Tax Credit, right? What else do I want to say? So this is the form 8863 is where either one of these credits is claimed. There are two parts to this. So refundable American Opportunity Credit. So you've got, do they put the part 3 in? No, they don't. There's a spot where you put information about the student. Complete a separate part 3 on page 2 for each student. Before you, they want you to complete part 3 before you complete part 1 or 2. This is where you go, you can calculate the refundable portion and calculate the credit itself. So American Opportunity Credit in the first part, non-refundable education credit, so that's a lifetime learning credit, is calculated down here. I'm not gonna go through that line by line. This is what the 1098T looks like. this is what you guys would receive. So here, checked if at least half-time student, that's the box I was referring to there. Checked if a graduate student, so if they're a graduate student, they would not qualify for the American Opportunity Tax Credit. It would be the lifetime learning credit, right? Payments received for tuition and related expenses. Scholarships, so box 1, you would subtract the amount in box 5. So if you got $5,000 scholarship and you got $10,000 in payments. Well, actually I shouldn't say that, because oftentimes what I would do, I would want to get a printout from the school to see exactly, because this can be very confusing. You also don't know like the books and stuff, like if you buy your books at Textbook Outlet, it's not gonna show up on here. And I don't know that even the books from the DMAC bookstore are gonna show up on here, or not.
No, you have to go to the Anthony bookstores, look at history, that's what I did, like British history.
And especially for a place like DMAC where the tuition is lower, I mean, sometimes adding all those books and supplies, that helps you to get up closer to the maximum amount of credit. So, questions?